So when you're thinking about retiring early, there's several factors to keep in mind other than just how much money you've saved for retirement. That's one piece of the puzzle, and hopefully you've saved a lot for retirement. But there's several other things, especially when you want to retire at a non-traditional age. And as long as I've been doing this, I'm not even sure what a traditional age is anymore. I mean, I see people working at 75 because they choose to, not because they have to. I see others stopping work at 55 because they choose to. But if we're going to retire at a non-traditional age, let's say before we can start accessing Social Security, which is available at age 62. So we're doing non-traditional retirement. So what do we want to factor? Well, first we have to think about, and this is an easy one right now because it's squarely hitting us in the face, but inflation. We have to look at how much we're going to need to spend today, but also how much those dollars will be adjusted for inflation heading into the future. So we're going to need to absolutely account and have a strong income plan that allows us to have the money we're going to need not only today, but far into the future. So we have to think about inflation. We have to discuss and have a plan for taxation, because for many people when they retire early, they'll have to access accounts that they've saved money in, and most of those are typically retirement accounts. So if we're retiring before the age of 59 and a half, there could be a penalty to get our money out of those accounts. That has to absolutely be put into a plan. And we have to account for the fact that most likely taxes will go up in your retirement, not down. So we have to take taxes in part of it. Now, this is one that many people miss. They don't expect to live as long as they are. So again, you want to plan for an early retirement, that's great, but don't factor in, well, I figure I'll probably die by a certain age, because guess what? People are living longer every day. And when you take the stress away from the workforce, you might find yourself getting healthier. It could happen. So guess what? We got to plan for a long retirement. We have to think about how we're going to handle medical insurance if we're retiring before a non-traditional age. Remember, Medicare insurance is not available to you until you reach that magical age of 65. So if we're retiring before age 65, where are we going to purchase our medical insurance, and how much is it going to cost? What are we going to do there? Now, there are some good plans available, but typically those plans go up in cost with the more income we have. So if you're paying yourself a lot and it's coming from a retirement account, that counts as taxable income, and that would greatly affect how much you may pay for your insurance. So we definitely want to factor in insurance. We have to think about long-term care, health care, where's it going to come from, spending plan, an income plan that's going to be adjusted for inflation. We have to factor in taxation. Now, the obvious, we're going to retire early. Have we taken care of our debt? Now, because of the low interest rate home loans we had in the past, we may not want to retire and be worried about paying off the house. I'm absolutely okay with that if you have an interest rate that is really low that you received in the last few years. But you certainly don't want to be carrying unnecessary credit card debt and things like that into this early retirement. That stuff has to be cleared up.